Thank you so much for joining me today. I am super excited to sit here with Andy and Paul today to help us navigate what it's going to look like to get a mortgage, or if you have questions about financing. And don't worry, I make sure that I really ask these guys the questions to give us the straight up answers, because we want to know what it is that we need to do today, right away, depending on our situation. So I'm happy that you can join us, and I hope that you will get a lot of great information from this week's video. So this week I want to dive into the world of mortgages and finance. There is a lot going on. There's always a lot of news, lots of policy changes. And instead of me doing all the talking like what you're used to, I brought in some professionals here that we can pick their brains, and hopefully they're going to give us some practical knowledge and things that you can use right away today, depending on whether you're a first-time home buyer or if you are just looking to renew your mortgage or you're just curious. So let's get into it. We've got Andy and Paul here from Westworth Financial. So can you tell me a little bit about what you guys do? Andy, explain it to us like we have no idea about anything to do with finances.
So I focus on business for self. I specialize with business owners, whether they're owning, operating businesses, construction companies, trade companies, which is all part of operation, or they're developers. And a lot of our clients are borrowing alternative financing. So when Paul can't help them with lending with your traditional banks, we go to alternative lenders. And we actually try not to use the word alternative. We try to use common sense lenders. And so common sense lenders can be anywhere from, for example, what are Scotia TD rates today?
So right now, if you're looking in the mid fours for rates, the alternative lending, the B lenders are going to be, sitting in the mid fives up to sixes right now, just with the rate adjustments that have happened as of late. And then from there, there's also another tier of lenders that we can go to as well.
Yeah, so common sense lending, if it doesn't fit in the typical box, we use stated income programs, higher rental offsets. We use financials. We look at their business and how we can get them lending that's close to traditional, but maybe 1 to 2 to 4% higher depending on the situation.
So anybody that needs money, you talk to one of these guys.
One way or the other.
They'll get it done.
Yeah, so within our firm, we've got enough experience to get any type of deal done.
Absolutely. Yeah. So what we want to do here today is I want to talk a little bit with you guys about mortgage renewals. We want to talk a little bit and help out these first-time home buyers, and just talk a little bit general as to what advice you can give people that they can take away today and start sort of applying those things that you are tips and tricks or whatnot. So we're really looking for you guys to give us all the secrets today. So with people renewing their mortgages, and assuming that a lot of the people that are renewing from 5 years ago, so they're coming up to a pretty shock, like there's a shock coming into their bank accounts. So what are some of the things you're helping people to manage that and alleviate some of that significant difference that they're going to feel? What advice are you giving people that are renewing right now?
Yeah, so we will see a large number of renewals coming up in 2025, probably a even larger amount that's going to be coming up in 2026 from all the 2021. A lot of people that went into variable or 5-year fix in 2021, they're going to be coming up for maturity. And then because of the amount of 3-year fix that were done in 2024, 2027 will also be. So the next 3 years are going to be very vital in terms of making sure that the clients are getting the best rate, lower the payments as much as possible, because like you said, it is going to be a big shock, especially for the people that were in those fixed rates in the 1s and 2s. And now, the good thing is the rates have been coming down over the last 6 months or so. And so where people thought last year that shock is going to be a 4% difference in rate, and oh my God, what are my payments going to look like? With the rates coming down the way they have been, it won't be as big. It still is going to be. And so one of the things that we have been advising clients, hey, look, you're going to be coming up for maturity at some point in the next few months or this year. One of the things that we can do is, depending on the lender, we are able to restructure, refinance. So if we want to, let's say they had a 30-year amortization, now 5 years is up, so they're at 25.
Right.
We can look to have discussions with the lenders if they're staying with the same lender, to see, hey, can you stretch me back out to 30
Right.
for the time being, just to bring the payments a little bit lower, because it is going to be that payment shock that's going to be coming.
Okay. So on that, so let's say a typical mortgage, if you have a payment, how much of that is actually decreasing the size of the payment by hopefully getting that extra 5-year amortization?
So it's obviously going to depend on the mortgage
sure.
amount, but it could be anywhere. So I just did a calculation for a client the other day. He had a very large mortgage. He was asking for the difference between the 25 and the 30. And this is a 7-figure mortgage. And so the payment difference is going to be about $650.
Okay, so it's a lot.
It's a lot, right?
Yeah.
And so obviously, if the mortgage is half that size, it's still a few $100.
Right.
And a few $100 still makes a difference.
Absolutely.
If incomes are still stagnant on what they were before, or some, right now, the way the economy's been, maybe the income is not even as high as it was before,
Yes.
that any amount of dollars is going to make a difference.
Absolutely.
And so now, in terms of advising, hey, what do I do now? Do I go into a fixed versus variable? If it was 6 months ago where the rates hadn't started coming down yet, we didn't know quite what was happening. Inflation was coming down, but not as quickly as we had hoped.
For sure.
So where the 3-year fixed was still making sense because of the, there's still like a 1.5% gap between the variable and the fixed. Now that they're almost on par, now we're starting to have the decision on, okay, rate announcement that we had another 1/4 point drop.
Right.
So that will help a little bit as well. And based on the sentiment that's coming from the Bank of Canada, we will probably see a couple more, maybe 3 more drops at some point throughout this year.
Right.
So now guiding in terms of, do we go with the 3-year fix, knowing the rates are almost the same, but the variable probably makes more sense at this point in time, knowing that, hey, we're going to see drops continue on, and your payments should start shrinking as we're going along with it, depending on which lender we go with. And so that's where we're advising the clients on, this lender is a variable rate, but they have a fixed payment.
Right.
So even though the rates might come down, your payment's still going to be the same. But if payment is important, okay, maybe we get you to a lender that's going to have a variable rate, variable payment. So, hey, that'll continue coming down as we go along.
Okay, so Paul made an interesting point. So just 2 days ago, we did have a 1/4 point cut in rates. So Paul, when does that take effect? Is that immediately or?
Yeah, so the banks will. So for example, the rate drop just happened. It takes the banks, depending on the bank, 1 or 2 days for it to update in their system.
Okay.
And so that takes effect, and then it'll take the next month for the payment to adjust accordingly.
Okay.
But as for the interest calculation, for most lenders, it will be the next day it takes effect.
Perfect.
Yeah.
So Paul, how is this going to be affecting your common sense lending when it comes to commercial projects? Typically, I mean, feet on the ground as a realtor, what I experience is builders are looking for 18 months to 2 years. So again, with this sort of whole debate, fixed, variable, what is it with the common sense lending that you're seeing has been working well that is helping to reduce some of that risk with the rate changes because it affects them immediately?
I think right now everybody is in a state of uncertainty. I think we can all see that. We know the rates are coming down. The market will always pick up, I would say. Maybe not what we had in the last 10 years, but gradually real estate has always been like gold. And so what I would encourage, to touch on Paul's as well, is get ahead of as you said, renewals are for 25, 26, 27. 26 and 27 are too far ahead, but for 25, like even if you're 6 months out, get ahead of them now.
Okay.
Start talking to the banks.
So is that how quickly people can start to prepare their renewals, is about 6 months prior to the actual renewal
I think you want
date?
to start having the conversations about 6 months out, and maybe even sooner, depending on your situation.
Right.
But depending on the lender, you can normally do some type of early renewal if you're going to be going back with them, or at least if there is going to be a change in lender, we want to be having the conversation 6 months or prior, and then submit the application 4 months before the maturity is going to be coming up.
Okay.
So this way you got all your ducks in a row.
Perfect.
When you come up for maturity.
And out of, I think, showing responsibility and maybe a sign of respect, it doesn't even hurt to call the bank early. Right. Instead of them chasing you, be proactive about it.
Right.
If someone came to me and says, "Hey, I'm looking to renew 6 months early," I would take it as a sign of respect and responsibility that they're actually thinking about this.
Right.
Right. And they can work on, like Paul says, the best option today, and I'm doing it myself, is extending to the 30 years.
Okay.
Right. Or majority of people did a 30-year 5 years ago.
Yep.
Extend to the 30 years.
Right.
And banks are okay with that because everybody's trying to work together.
For sure.
Everybody's, trying to help each other out. And to touch on that base, if you are getting a renewal in the next 9 months to a year to 2 years out,
Right.
because the banks are using your current rate as a qualifying,
Right.
you may want to start thinking about refinancing
Okay.
right now, right? Start thinking about getting a line of credit.
Yep.
Because your mortgage payment at say 2.89 is lower.
Right.
So you go in and say, okay, I'm looking for a line of credit. I'm looking for a refinance on multiple different properties if you have. So
Right.
a lot of our clients are investors.
Investors,
And so-
self-employed, and I think one of the things just about the refinance is because of how tough things have been for a lot of people over the last couple of years, people's unsecured debts have started to compile, and so now they might be drowning in unsecured debt,
Right.
where sometimes it doesn't even make sense to wait for the maturity,
Right.
where it's like, hey, I'm paying 18, 19, 22% on these credit cards. I've got these unsecured LOCs that are at 9, 10%.
Right.
Maybe it makes sense to actually refinance now
Right.
to consolidate everything, bring your payments down, stretch out to 30-year amortization, and that still might be better, even though there might be a penalty involved. And so we do annual reviews with our client. We consistently stay in touch with them and making sure, hey, are you doing okay? Is there anything that we can do to help now? And I think that goes a long way as well.
Right. So one of the things that I've noticed when I am doing my open houses is a lot of you guys, first-time home buyers, you're out, you're starting to feel like the waters are just perfect for you now. The multiple offers are quite the scene of the past. And with the rates coming down, as Paul and Andy have mentioned, it is a good environment for you to start looking. But having said that, there's so many first-time home buyers that are out there that are kind of clueless as to exactly what it looks like in terms of the financing side of things. And that's what I want to talk about and help you guys out a little bit as well. What sort of options, programs are, I know there's quite a few of them, so I don't want to get into a lot, but what are the one or two that you find have been really helpful to first-time home buyers and that have actually taken advantage of the programs that are out there, either through legislation or through lenders? What would be your recommendation?
So in terms of first-time home buyers, a lot of the issues that most people have is going to be the down payment.
Absolutely.
Right. So now that's always an issue, even if somebody's making a decent amount of income, but trying, because the cost of living here is so high.
Right. Which bank is easiest to rob?
Exactly.
Yeah.
And we'll get to that in a minute, which is.
Oh, you do know. Okay, great.
Yeah. Well, it's Bank of Mom and Dad. So.
Okay. Good one. Yeah.
So in terms of most people, they'll say, hey, like, what's the minimum that I can get away with for down payment? And so that is going to be 5% on the first 500,000, 10% on the balance. And there's been some new rule changes that have happened at the end of last year, which are now allowing you, if you're doing an insured mortgage, which is less than 20% down, they're increasing that threshold from $1 million to 1.5 million.
Okay.
So I think that will help some people in a sense, right? So now that's going to take your down payment. If, like, let's say you were to buy something for.
Can I just address the elephant in the room? Like,
Yeah.
how many first-time buyers out there are trying to afford $1 million?
$1 million.
Like,
Well,
I mean, is this policy helping first-time buyers?
It-
Really?
It is going to only help first-time home buyers that are, it could be a professional couple where they have really high incomes, and I'll get to that part in a second as well. And so I'll just kind of give you an example. And we haven't seen any yet. So, it hasn't been that long since the legislation's taken place. But I guess the next 3 to 6 months will tell on what that's going to look like. So, for example, if you are buying for 1.5 million, you can get away with 5% on the first 500,000, 10% on the rest, right? So now we're looking at $125,000 down payment. Now that's still a significant size for mortgage. And so
what
now
is the CMHC portion of that?
Huge.
Can you just talk about that? Because
it's going to be, so of your 125, I don't have the exact number in front of me, but I think it's going to be about 56 grand.
Okay.
That is going to go to that premium.
Okay.
Right. So now.
So can you explain? Can you explain to the people? You've got the insured mortgages, you've got the CMHC housing. cost that is rolled into that. So even though
Yes.
you're coming off with a lower down payment, you're paying a premium actually to say, well, I only have 10 or 15%. So where's that offset if you could actually go? So my understanding is you go to 20%,
Yep.
then you don't have to pay that premium fee.
Exactly.
So where's the sweet spot there?
So if I tell my clients, if at all possible, and whether that be help from, most of the time it's going to be help from parents, right?
Right.
And so we'll see a big shift in wealth transfer coming over the next 10 years as well. And where a lot of parents now are saying, hey, you know what, versus giving you funds through my will eventually, let me transfer some of that over to you now so you can at least get into the housing market. Because like I know for my kids and their generation, it's going to be next to impossible to be able to buy a home. And so now if parents are willing and able to do that wealth transfer starting now, get their kids into a home and allowing their wealth to grow.
Right.
Right. And so that is what we've been seeing a lot of, where more and more parents are starting to help out. So a lot of my first time home buyers that are purchasing up to that $1 million mark, a lot of it is with family help, right? And even if it's not 20%, even if it's a lower amount, we're still seeing a lot of help coming from parents.
Okay.
And so what I do say is, if at all possible, go with the 20. That's going to be twofold. One is the fact that you don't have to worry about the CMHC premium.
Right.
So that is a big cost. Even though it gets rolled into the mortgage, it's still a cost.
It's a cost, but at least it's going towards your purchase price, not just a premium that you're paying on.
That, yeah, you don't have to pay up front. So they'll roll it into the mortgage, and the mortgage amortized over 25 years.
Right.
Okay, so now that's going to be broken up over that time.
Okay.
But it's still getting rolled in the mortgage. You're technically still paying interest on it because it's rolled into your mortgage.
Absolutely.
Right. And so if you can come up with 20, I always suggest that. Now, part of the other rules changes as well. They'll let you do the 30-year amortization on insured mortgages. So that will help a little bit. Like I mentioned, large size mortgage can save you $500-$600 a month. Right. So that will help with cash flow.
Perfect.
But the other thing is, if you do go and do the 20%, 30 years, okay, you can do that both ways. But now your mortgage size is smaller.
Right.
So now your payments will be a little bit lower as well because you're putting more down.
Right.
And also in terms of qualification, when you do get an insured mortgage, it's got to be insured through one of the 3 insurers. And so they are very cut and dry in terms of, this is the max allowable ratio we'll allow.
Okay.
Like our GDS, TDS calculations, they're going to say you can't go past this.
Okay.
It is what it is. Now, if we're going conventional and we are doing the 20%, then we get lenders that will allow ratio exceptions, meaning that, you're actually only allowed 39 and 44% on your GDS and TDS ratios, but some lenders will let you push that limit. So now you can actually get approved for more than your income might allow if you do that 20.
Okay.
Yeah.
So basically, when Paul is talking about the GDS, TDS, is you're going into the bank and you're saying, I want to borrow some money. They want to look at, well, how much money do you owe every month? How much do you pay every month? What are your rents? What are your, insurance, all that? How much debt are you holding? So those are the ratios that Paul's talking about. So that's what the bank looks at. So if you don't have, and who doesn't, but let's say you don't have any bills, you don't pay anything, you're living at home, that might look a lot better than somebody who is renting, paying rents, paying for your car, your insurance, your credit cards. Maybe we always talk about, if you're signing a contract, don't go and lease a new vehicle because you're adding on more debt. And as soon as the bank sees that, even though you have already accepted the offer, they're probably going to pull back their confirmation. Thank you so much for joining me on this week's video. I hope that I shed some light as to what it looks like in terms of getting financing, depending on your situation, how things generally work in the mortgage world. And as much as there's a lot of information out there, it is just really about working with the right person who can help you navigate the sort of details as you need to understand them, so you're not overwhelmed by all the information at the same time. And again, it's really just also important to have a realtor who is working alongside the mortgage broker to really ensure certain properties are going to be able to get through the system a little bit better, or if there are any issues, what we can do to plan ahead for those. So I hope the video has been helpful. Thank you so much for watching all the way to the end. As always, if you're not currently working with a realtor, then I'd be happy to apply for that position. Please just feel free to reach out if you have any questions at all. If you're not quite ready yet, then I'm happy to help you from a distance by putting out these videos and hoping that they're helping you. Thank you again, and we'll see you on next week's video.